Welcome to 1031 University. I'm Paul Holloway. Today's topic is completing a 1031 exchange, and what if the client says, is it possible, I know that I have to sell a rental and buy a rental, for example, to make it work under 1031, but is it possible to eventually change the intent of say the replacement property and maybe call it my principal residence in the future? And if we can do that, is it then possible to maybe get to the dollars tax-free under an entirely different section of the tax code? So this class is going to be a combination of 1031 and section 121 of the tax code. And here is the strategy that some people attempt to complete under 1031. So you have a situation where you are actually selling a rental property, you complete a 1031 exchange, buying another rental property of equal or greater value. So there is a good 1031 exchange. Sell a rental, buy a replacement rental of equal or greater value, reinvest the proceeds. So far you're good. You have full tax deferment. But what if you want to convert this property to a principal residence? So we change it from a rental to your principal residence. Then is it possible to get to those dollars tax-free under this section of the code, 121? Well, in the past we had people, their strategy was, I'll complete the 1031 exchange, I'll rent the property for 1 year, and then I'll move into the property as my principal residence, live in it for the next 2 years, and then I should be able to sell that property under 121 of the tax code and get to all of my dollars tax-free. That was the strategy before the IRS actually gave guidance on this, and they did not give guidance under 1031 of the code, but the IRS actually clarified the issue under 121, which is the principal residence rules. Generally speaking, 121 states that any property that you do that you could deem to be your principal residence, if you do a 5-year look back on that property and you can argue that you lived in it for any 2 of the past 5 years, a single person can get the $250,000 of gain tax-free. If they're single, upwards of $500,000 of gain tax-free if they're married. And I stress the term free, not deferred. You can actually take those dollars, go to Vegas, do whatever you wish. But what happened is the IRS became savvy to a lot of people doing these 1031 convert to 121s. As an industry, we weren't sure if they would say that can be done. The under 121 of the code, the IRS ended up clarifying that it is possible to do this, but, and there's always a but with the IRS, they want you to actually do a few additional things to make that property work. The first thing of clarity is that you first of all have to complete the 1031 exchange and then qualify this replacement property as an investment. How you would qualify that is to actually keep it as a rental for 2 years. So conservatively, the examples in the code state that you would want to rent it out for the next 2 years. The next requirement that the IRS clarified is they want you to now hold this property that you are deeming to be your principal residence for a total of 5 full years. So it is a 5-year hold, and that would include arguably the 2-year period. So 2 years plus living in it the next 3 years, now you have satisfied the 5-year hold on this property. So what would happen after this 5-year period if you now sell the property? Do you get all of the gain in that property tax-free? Unfortunately not. The bad news is you don't get it all tax-free. The good news is that you'll be able to get to a fractional share of this gain tax-free, and it's based on the fraction of time where it was your principal residence compared to the fraction of time where it was a rental. So under this example, 5 years you held it, you lived in it for 3 years, that would mean that 60% of the gain would be arguably tax-free up to the $250,000, $500,000 threshold, but 40%, 2 of the 5 years where it was an investment property, that 40% of the gain is still going to be taxable. So it's not a perfect world situation, but with planning and assuming the tax code does not change any further, you may be able to get to a part of your proceeds tax-free if you eventually convert the property to a principal residence, hold it for at least 5 years, and then at that point sell it under 121. And I cannot caution enough, this is the requirements as of today, but if the tax code changes further, all these rules may be off the board. So you definitely have to stay apprised. The one final thing to clarify is the longer you hold it as your principal residence, the more that fraction goes in your favor. So let's change the facts a little bit, that you rented it for 2 years, you now live in it the next 8 years. So now if you sell that property after 10 years, which satisfies the minimum 5-year hold, then 80% of your gain would be tax-free. 20% of the gain is still going to be taxable. So once again, the longer you consider it to be your principal residence, the more gain you would be able to get to tax-free under 121 of the code. So hopefully this clarifies the difference between the two sections of the code and how you may be able to use both sections to your benefit. So this has been Paul Holloway with 1031 University. If you enjoyed this piece, we have other YouTube videos. Please subscribe to our channel, or you can actually visit Accruit's website and look at some of our blog pieces. We hope you find them to be educational. Thank you very much.